Richard Wolff is coming back on April 16th. Are you going to be in studio, David?
Of course.
Oh, of course, huh? You got the balls to be in studio?
I never run.
You never run, huh? Did you see that fan art where Richard Wolff beheaded you?
I'll be honest. I don't know.
That was a little disturbing. That was. I would just like to say, actually, as a serious point, tone it down a little bit. Tone it down a little bit. I think more of this sort of Scorsese thing works.
Well, I just wasn't prepared for how I felt after seeing my head ripped off of my body.
That was a lot. That was a lot. I think a nice solid punch in Griscom's jaw would get the point across. Without further ado, it's the Griscom Economic Minute.
Yeah, well, I mean,
David Griscom.
After what you were talking about, it flows pretty well. We talk about these tech companies like Lyft and Uber, and a lot of the innovation that's going on in the U.S. economy has been primarily about ways to monopolize already existing economic activities. So we're looking at Lyft, which they're going into their IPO coming up.
Right.
There's going to be about 10 major tech companies this year that looks like they're coming up. So it's going to be a very, very big year for IPOs. And right now they're targeting a $23 billion valuation. Despite this, though, the founders are still going to have majority control of the company, even though they won't be owning the majority of the stock. And let's just talk about a company like Lyft, which does a bunch of stuff that's pretty shady. One, they continue to categorize their employees as independent contractors. Mm-hmm. Two, they are yet to make anything resembling a profit. Actually, in fact, last year, they had nearly $1 billion in losses. And they've been preparing the market for this realization. But they're coming out first out of this big wave of IPOs because they want to get ahead of their competition, primarily Uber. Uber is another company. They're going to be going for a $120 billion valuation. In 2018, their losses were $1.8 billion. And primarily, this is all money that's being spent to subsidize rides so that they can charge a lower price than taxi companies or any other kind of competition. So we're seeing the way that capitalism is sort of cannibalizing itself, wherein we're just having a few companies trying to find ways to lower their prices artificially and then hopefully being able to inflate them, which is something that is very likely to happen on a large scale once these companies become public and you start having people who invested lots of money wanting to get paid. But getting paid is the point, and that's why a lot of these companies are going into IPOs, because it's a great payday for the founders and the early investors and the early employees. And they're going to be trying to get over something that looks like it's going to be happening in 2019, which is going to be a very significant slowdown. We have the Fed meeting tomorrow, and we'll see what happens with the interest rate. But because of the uncertainty around Brexit and the U.S.-China trade negotiations, along with low job growth actually over the past couple of months, and industrial production numbers are continually looking weak, and it's not just the United States. Even Germany has had to slash their growth forecast in the past couple of weeks. And what we're seeing right now is very much two different types of situations, wherein you have a few tech companies and a few small groups of people who have been profiting immensely from an economy that's really not working for most people. And you look at cities like San Francisco, and you really start to see the disparity between most Americans, because where most job growth is, where most people have opportunities now, is in service jobs, which tend to be lower wage. They tend to be in retail, hotel work, and healthcare. And then you have some super earners who are making ridiculous amounts of money. When the first IPOs hit San Francisco, when Facebook and Twitter hit their IPOs, there were 2,500 new millionaires made overnight. And you can only imagine what that does to housing prices in a place that's already very squeezed. So we're seeing, with Lyft is going up for an IPO, Uber is going for an IPO, Pinterest is going for an IPO. About 9 to 10 major tech companies are expected to, release IPOs later this year. Imagine how much that's going to hit an already tight labor market, a housing market. We've already seen just in the past couple of months, in expectation of the IPOs, that around 2,400 listings for houses in the area have been pulled down because people are just wanting to sit on that so that they can charge a lot more in the future. So people are being squeezed for their time, they're being squeezed for their life, and we need to really start paying attention and start talking much more seriously about the staggering disparity in our economy, and also the unsustainable way that we're allowing some people to profit on the backs of everyone else.
100%. That's exactly right. You've just watched a Michael Brooks show video, and you can watch all of our full main live shows every Tuesday night at around 7 p.m. Eastern Time, and subscribe to get all of the clips you want. We're covering the globe. We're focusing on international relations, the intellectual dark web. We're having fun. We're doing deep dives with a lot of amazing guests. Of course, become a patron for the whole thing at patreon.com/TMBS, or subscribe to this YouTube channel and help us keep growing and get that content out there. Subscribe below.